What's going on with the NASDAQ? How deep is this move going to go? And when are prices going to bounce again? Hi, I'm Doc Severson for the Ready, Set, Trade Market Minute for Monday, the 8th of March. What we have here to start off with is just a naked daily price chart of the Qs, which is the ETF of the NASDAQ 100. So obviously this is the pullback that we're concerned with, and we want to know how far is this likely to go? When is this going to bounce? Now, before I go any further, I do have to caveat this by saying, look, the price can do whatever it wants to do, and sometimes it does. But I would say a good 80 to 90% of the time, we can use standard technical techniques applied to the chart to be able to give us an understanding of the probabilities as to where it may find support, how long this will go, and at what point we might expect to see some type of a bounce. So I'm going to walk you through a progression of what I do to a chart that's got, frankly, the fewest number of techniques and bells and whistles and trailing studies and everything else like that. We're going to do most of our work just on the price chart alone or use price-based tools. Now, the first one is average movements. And what I'm going to do is go over here to the ruler and measure out some of these average movements. So we had this move a year ago, which was about 30%. And actually the NASDAQ did not get hit as hard as some of the other indices out there for various reasons due to stay at home. But this was a once every decade move at least. Okay, so there's that one. We're going to ignore that one for right now and say that that's an outlier. But what we're going to do is look at some of these other corrections that we've had. Roughly down 14%. For this one back in September, and the follow-up one, which was in October, was down roughly 10.5%. So that's a standard correction, 10, 11%, even as much as 14%. That generally is about what we will see during standard corrections. So what about the current one? The current one right now is clocking in at about, and this is the Qs, about 12%. So kind of right in the zone of where we'd normally see a standard correction. So any deeper than this, and it signifies something that we have to be concerned with. The second tool that I'm going to use is, again, a price formation that's called a swing test. And this is probably better seen if we go a little bit further out in time and reduce the amount of noise and go out to the weekly chart. So the weekly chart is going to show us what a swing test looks like. And this is basically what we're seeing. Former resistance, former resistance, former resistance becomes new support. And so what we're looking for is a swing test, which is right around in this area. It's not necessarily to the tick. It's more of a zone. But what I do want to see is the price use this as a support level, as a swing test. And so therefore the swing test is complete if we see it drop below here on a closing basis. So a closing basis on a daily chart. If it does not bounce from here, then that is a failed swing test. And that's a bad sign that we may see lower prices from here. So back to the daily chart. Again, you can see that this swing test comes right in about the 300 level on the Q. So this has got to hold on a closing basis. If we close below there, doesn't matter if we briefly dip down below there intraday, but it must close above there for the swing test to be valid. All right, the third tool that I have here is still, once again, price-based related, and it's called a chart pattern. There's a number of standard chart patterns that are out there, one of which is the head with shoulders pattern. And so what we're going to do is we're going to draw the neckline. And the best way that I can explain where the neckline is basically watching charts for the last 16 years every single day. And you tend to see things like this. So what we have here is a left shoulder. We have a head pattern, which is much higher. And then we have a very abbreviated, truncated right shoulder. I was a little bit dubious about this at first, but it does appear to be playing out. And in fact, what we have seen over the last 2 days is a very common level called a back test. So the price drives down and comes and tests this neckline level from below and then is rejected by that. Now, the whole idea of the head with shoulders pattern is that we can do a measured move. And the measured move is measured from the top of the head pattern down to the neckline. And we'll use a different color just to highlight this a little bit better. I'm also going to expand on this a little bit so you can see this better. And what we're going to do is that once we break through that neckline, the measured move is basically the projection, the same distance from the neckline up to the top of the head pattern projected to the downside. And so what that gives us is a target of about 280 to 281 down in this area on the Qs. Now I'm going to leave this on because it's going to come in handy later on when we layer in some of the other studies that we use. And now we move to number 4, which is Fibonacci retracements. So Fibonacci retracements are a good solid way to understand when we go from the bottom of a swing up to the very top of a swing where we might get some decent landing spots. And these landing spots are much, much better if they form what's called confluence with other studies. So as we start to stack on our analysis here, we can start to build these confluence points, which are very, very important. So in other words, what we're going to look for is anything that ties together with 38.2, 50%, and 61.8% retracement of the initial swing to the upside. So there's one other thing too here. So we can see that we've already lost the 38.2. That got closed below today, as well as the 50%. So all we have left is 61.8. Now here's something else about 61.8. This is called the last line of defense for the bulls. If the price ends up closing below the 61.8% retracement, this is typically where we see the closure of the triangle. So we end up closing the triangle, which means that we go all the way back down to from whence it came. We will close the entire swing if that's the case. Now, there's no guarantee of this. It's just that the probabilities are increased that if we do lose that 61.8% retracement, which is right around 295 on the Qs, that we may have a quick trip down to the dungeon here. All right, I am going to pull off the fibs because we have those levels. We're going to remove that. We're going to keep this projection. And then the next tool that we're going to pick is called volume profile. And what I'm going to do is just turn this on, and we have this large histogram on the right-hand sidebar. Now, what does this mean? Basically, what this is volume at a specific price. So what you can see is that we've had, in this area here, we've had a lot of price and volume trading in that area. And what that does is that builds up support from the top. But on the other hand, when we see areas like this that are very thin, this does not create support and resistance. And unfortunately, that's where the price closed today, which is where I call these a black hole, because what price tends to do is kind of leapfrog from these high value nodes to the next one, to the next one. So this is where the price will find support, is at areas where it spent a lot of time trading. Now, the importance here, if I clean this up a little bit, is that we can see that this lower projection for the head and shoulders pattern does line up really nicely with this area right in here. And this is where I would expect to see major support come into play. From here, let's bring in our next tool, which is good old volume. So I've just got volume down here with a 20-day moving average, and this is volume at time. And what we want to look for is areas of very high volume on downside price behavior, because this typically will show us potential bottoms. So obviously there was a huge amount of volume down here a year ago. We had an enormous amount of volume, relatively really high compared to the crash back here back in September. So you can see how many people were just completely on the wrong side of price action and forced into taking actions that created a lot of volume. Well, guess what? We've got even more right now. So this is equivalent to the volume that we had back here at the crash, which is good. What you want to see on a pullback is very high volume levels, because what this shows is tremendous disagreement between the two sides of the ledger. It also shows potential capitulation, where people just finally can't take it any longer and they're tossing in their shares. And capitulation is necessary to form that bottom and to build up the negativity required to get a short squeeze or rescue from these bottoms. Now, you'll notice that we've gone through all of this analysis without putting up one single MACD or oscillator or anything else like that. Those are all trailing studies. Those are going to show some level of change, but they're always going to be trailing when we compare them to price. So with that in mind, I'm actually add one trailing study here, and it's the good old 200-day moving average. It's just a simple moving average, and it's what I use as a trend filter to show a longer term uptrend. Now, quite often price will come back down and retest the 200-day moving average. It's never a signal. It's never used as a trading signal by itself. It's only used as a filter, and it represents the mean of the price. So when we put everything together here, we have a head with shoulders pattern, which is broken to the downside and right now appears to be on its way down to the forward price projection of the head and shoulders pattern, which is down here near about 282. And there's a tremendous amount of confluence here, because not only do we have the measured move down to about 282, but we also have the 200-day moving average, which is going to be noticed. A lot of people will see that. It becomes to some degree a self-fulfilling prophecy. We also have a very strong high volume node here on the volume profile. So to me, this whole area represents a massive target and a very, very strong support level on the first way down. Now, what does that mean in terms of the actual movement to this? If we go ahead and bring out our ruler, this is going to show us about, this case, about a 16% haircut to the downside, which is, oh, by the way, what Morgan Stanley said was going to happen this weekend. But again, we're not going to trade based on what we think some institution thinks. We're going to put the evidence together like this, piece by piece, and try to find areas where it's going to be a strong level of support. Now, remember what I said earlier, the price can just take off tomorrow and find a different reason or a different catalyst to all of a sudden short squeeze to the upside. And this thing is all over and hallelujah. But what I always like to do is to form my thesis based on, okay, if the price continues going lower, where is a good landing zone for this? If the price continues sideways, how will we know that? If the price continues higher, what's the level at which it breaks the downtrend and that I can become bullish on this index? All right, folks, I hope that helps. The more you do your analysis based on price alone, the better off that you're going to be and the more rapidly that you will develop in your trading skills. I hope this helps. You guys have a great day.